Every year, thousands of self-employed people hand their accountant a shoebox, literally or metaphorically, containing 12 months of receipts, bank statements, and guesswork, and pay several $100s extra for the privilege. Good bookkeeping does not require accounting knowledge. It requires a system, 30 minutes per month, and the discipline to do it consistently. The result is a tax return that is accurate, a quarterly tax payment that is not a guess, and an audit, if one comes, that you can defend. Here is the minimum viable system for every self-employed person. Bookkeeping at its core is recording financial transactions, money in and money out, and categorizing them correctly. For a Schedule C filer, the output of your bookkeeping is the ability to produce a profit and loss statement. Total income minus total expenses equals net profit. That net profit number is the foundation of your self-employment tax, your income tax, your quarterly estimated payments, and every deduction you claim. If you do not know your profit and loss at any given time, you cannot manage your tax liability proactively. You can only react to whatever your accountant tells you in April. The foundation, a dedicated business bank account, and a dedicated business credit card. If every business transaction flows through those two accounts, and only business transactions, your monthly bookkeeping is a matter of reviewing and categorizing what is already recorded. If you are still running business transactions through a personal account, your first monthly task is fixing that. The separation eliminates 80% of the complexity in small business bookkeeping. It is not a bookkeeping technique, it is a prerequisite. Once separation exists, the monthly tasks become manageable and fast. Task 1. Categorize all transactions in your business bank account and credit card. Most accounting software, QuickBooks, Self-Employed, Wave, FreshBooks, Xero, connects directly to your accounts and imports transactions automatically. Your job is to categorize each transaction: advertising, office supplies, software subscriptions, professional services, travel, meals at 50%, and so on. For transactions you have seen before, the software learns and auto-categorizes. A typical freelancer with 30 to 50 transactions per month can complete this in 15 to 20 minutes using software categorization tools. Task 2. Reconcile your accounts. At month end, your accounting software balance and your actual bank statement balance should match to the dollar. Reconciliation catches duplicate entries, missed transactions, and incorrect categorizations. In accounting software, reconciliation is typically a wizard that walks you through matching your software transactions to the bank statement. Any discrepancy has a cause. Find it and correct it before moving to the next month. Task 3. File receipts. For expenses over $75, the IRS has historically preferred actual receipt documentation rather than relying solely on bank statements. Many accounting software packages allow you to photograph and attach receipts directly to each transaction using a mobile app. At minimum, keep a digital folder, organized by month, containing photographs of all receipts for transactions over $75. Smaller amounts can typically be supported by bank statement entries alone. The receipt filing task takes 5 minutes if done weekly. It takes 45 minutes in a single monthly session of catching up. Either approach works, consistency is the variable. Task 4. Review your profit and loss report. Once transactions are categorized and accounts reconciled, generate a month-to-date and year-to-date P&L from your software. This tells you your estimated net profit for the year so far. Divide that by the months elapsed and project it to year-end. Apply your expected SE tax rate, approximately 14.1% on net profit after the 0.9235 adjustment, and your marginal income tax rate. The result is your estimated annual tax liability, which informs whether your quarterly payments are on track or need adjustment. This analysis takes 5 minutes and prevents the December surprise of discovering you underpaid by $8,000. What you do not need to do: monthly formal journal entries, depreciation calculations, inventory valuation, or payroll tax filings unless you have employees. Those are quarterly or annual tasks. Monthly bookkeeping for a typical Schedule C self-employed person is categorization, reconciliation, receipt filing, and a P&L review. Total time with software, 30 to 45 minutes. Without software, using spreadsheets, 60 to 90 minutes. The spreadsheet approach works but requires manual bank import and formula management that software handles automatically. Software is worth the $15 to $30 per month for anyone earning over $30,000 annually from self-employment. The year-end tasks that become trivial when monthly bookkeeping is done, generating a final P&L for the year, one click in software. Providing your accountant with income and expense totals by category, exported from software in 5 minutes. Identifying which expenses need additional documentation before the return is filed. Reviewing your Schedule C categories for completeness. Are all legitimate expenses captured? And producing a contractor payment summary to confirm 1,099 SE requirements. Each of these tasks is a 5-minute review rather than a multi-hour reconstruction exercise. That is the payoff of 30 minutes per month. Bookkeeping is not accounting. It does not require credentials or financial expertise. It requires a system, separated accounts, accounting software, a monthly routine, and the discipline to follow it for 30 minutes at the end of each month. The businesses that maintain clean books make better financial decisions, pay accurate taxes, and survive audits. The businesses that do not scramble annually, miss deductions, and overpay both their tax bills and their accountants. If you want to understand when your tax situation becomes complex enough to require a professional rather than doing it yourself, our video on when you actually need a CP